This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, Monday's post-US election excitement and, of course, vaccine optimism slowly subsided across markets as traders, of course, expected a tame end to quite a volatile trading week. We saw emerging market stocks faring pretty well. MSCI's index of equities was up about 0.8% on the day. Meanwhile, South Africa's main stock index dropping for a third day. It was dragged lower by miners and banks as sentiment towards riskier assets started to wane. The mining index retreated 0.6% today, while the banking index fell about 1.8% as we saw the rand trading lower against the dollar. Now, index giant Naspers was the biggest boost to the market. It climbed 0.9% on the day. In Nigeria, the market inched up almost 1%, and that was after climbing over 6% yesterday, which is its highest since 2015. Of course, yesterday triggered a circuit breaker as traders bought up shares in a handful of assets. Investor sentiment in Nigeria has been boosted by a persistent slide in short-term interest rates offered on government treasury bills, which of course traders say is pushing investors towards equities now. Now, also coming up on today's show, Zambia in default as it fails to meet a 30-day deadline to meet Eurobond obligations. And Dangote Cement to resume exports as Nigeria eases its border restrictions. And a new way to dine. We look at the evolution of Kloof Street village in Cape Town, South Africa. Well, let's start off in Zambia. Holders of the country's Eurobonds have rejected a request from the government to defer interest payments. This is according to a statement from the country's finance ministry earlier on Friday. It essentially indicated that the country is on the brink of defaulting. However, Vice President Inonge Wina told lawmakers that the country will not default. He did not indicate whether payment had been initiated yet. Zambia, of course, missed payments of a $42.5 million coupon on one of its dollar-denominated sovereign bonds last month. It had a 30-day grace period that expires at midnight this Friday. Of course, Zambia had requested that its Eurobond holders defer interest payments until April as it struggles with the coronavirus pandemic and a weak economy. A senior officer at UK-based Jubilee Debt Campaign, which is pushing for debt relief for poor countries, says that it's better for Zambia not to pay as the debt was extended at very high margins.
The bondholders, many of them, never lent Zambia any money. They bought the debt cheaply, and so they stand to make huge profits. We estimate between 75% and 250% profit if they are paid in full. So they clearly should not be making that profit out of this crisis. They can easily write down the debt. The crisis of the last few years has come from trying to pay a debt that cannot be paid. And the first step to dealing with that is acknowledging this debt can't be paid, therefore it won't be paid.
Well, let's now shift our focus to Nigeria. The country's government has allowed Dangote Cement, Bua Group, and a gas company to resume exports across its land borders. The move has raised some hopes that the country may be softening its position on the border closure policy after a year-long blockade. Now, critics of the move, including the Lagos Chamber of Commerce and Industry, have questioned the decision to allow only selected companies to move goods across the border. Of course, Nigeria moved to close its borders with neighboring countries just last year in a bid to curb smuggling and boost local production. Well, let's now delve further into this with Africa's leading logistics tech firm, Kobo 360. We are joined now by the firm's head of structured finance, Genko Sanli. Great to have you on the show with us, sir. Now, of course, some are seeing this move as a possible softening of the government's position on border closures. Others, such as the Lagos Chamber of Commerce and Industry, as we mentioned, are basically calling out the government's selective approach in these exemptions. So what exactly is your position as a player in the sector?
All right, good evening. Well, thank you very much for the question. I mean, an opening of the border is always a good sign for transporters. It's always a good sign also for the traders who export, and 90% of the transportations are by road. The reopening of the road borders is always a good sign for the business. So I think that the reopening of Dangote cement it's already a reopening. I read also that it was also for the waiver extended to BUP also from my reading today, and I think that it's a way of for the government maybe to try it and see if it works well for everyone and if they control the situation at the borders actually.
Well, we can't deny the fact that many companies have been impacted by those border closures. Kobo 360, you recorded a drop in customer demand by about 28% in the first few months of those closures. Now, paint us a picture of the extent that this move, of course, has affected your operations and, of course, your bottom line.
All right, thank you very much. Our business effectively dropped by about 28% when the borders closure was affected. So obviously that was not a good news. What is important to know is that a lot of the products made by the multinationals are made by the factory in Ghana or Togo or in Nigeria. So, and when the distribution is being done, they have to be sent across the borders. So these products have to move actually for people to be able to use them. I think it is important that for us and for everyone, especially for the SMEs in Nigeria, that the borders are reopened and business can be back to normal in that respect.
Well, what exactly is your take on how effective Nigeria's government moved to close its borders in order to tackle smuggling and, of course, boost local production in the country? What's your take on how effective that move has been, specifically on these issues?
Well, effectively, the reason why they closed the borders was to reduce the smuggling between Benin and Nigeria. So you have a lot of rice imports from Benin, which was not legal. Okay, so and that had to do with the difference of taxation of imports between Benin and Nigeria. Nigeria taxes rice imports at 70%. Benin taxes them at 70%. So obviously, where the borders are permeable, that business will happen. There will be smuggling. So if they want to stop smuggling, obviously one possibility is to close the borders. Effectively, another possibility would have been to align between countries the importation tariffs actually for both the countries, so at the regional level. So there are other ways of controlling the smuggling to equalize the importation tariffs, trade tariffs.
Well, we do have to leave it there, but many thanks for your insights. Of course, that was Kobo 360's Head of Structured Finance, Mr. Janko Sanley, joining us there on Skype. Well, let's move on now. Trade tensions between Ghana and Nigeria continues to simmer months after shops of Nigerian retailers were locked up in Accra and other parts of the country. Now, Ghana's government says it is enforcing a law which bars foreigners from engaging in retail trade. But Nigerian traders claim they are being discriminated against, something the Ghanaian authorities deny. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Yakubu Mohammed sells phone accessories in Accra's business hub. He is one of many local traders affected by the closure of Nigerian-owned shops here.
We were buying things at a cheaper price from the Nigerian traders, but since their shops were locked up, we're forced to buy the same things at a much higher price from Ghanaian traders. Our customers are complaining and it's affecting our business.
In August, the government locked up shops of foreigners, especially those of Nigerians, while enforcing a law which bars foreigners from engaging in retail trade. The law requires foreigners to invest $1 million in their retail business before operating in Ghana, but it has not been enforced for many years. Local traders have accused Nigerians of destroying the local market and demanded the government enforce the law.
Local businesses are dying because foreigners are taking over the local market, which I think in 1997 or in 94, 97, they sat down and realized that this is what would happen one day. That is why the GIPC law 586 was enacted.
Many Nigerian traders say the law is unfair.
These things are getting out of hand. Not when see men here, you see them with families. All of them, they have children here. And you are rendering them useless and their family at the same time. And most of them married to Ghanaians. You are telling them to go and bring $1 million before their shops will be open. Without that $1 million, you can't open their shops, even when they have paid their taxes and other revenue.
The Nigerian community in Ghana has staged protests calling on their government to help resolve the trade dispute. There have been diplomatic discussions between the two nations leading to the setting up of a Nigeria-Ghana Business Council. It is aimed at improving trade and investment ties. No clear date has been given for the opening of the Nigerian shops. Traders fear their goods risk getting damaged as they remain locked up. While the trade tension between Nigeria and Ghana lingers, experts say it could affect the implementation of the African Continental Free Trade Agreement set to begin in January.
The authority of Ghana are determined to keep that shop locked, maybe till after election. That's what we can deduce about it, because I don't think there is anything that is so hard in opening that shop, knowing fully well the type of relationship between these two countries.
These Nigerian business owners have lost hope of getting the trade dispute unlocked. Some have called on the Nigerian government to evacuate them from Ghana. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Well, let's now go back to one of our top stories today. Zambia may be in default. The Southern African nation may have failed to meet its 30-day deadline, of course, to meet its Eurobond obligations. Well, let's now find out more about the situation on the ground. We're joined by CGTN's Farai Mwakutuya. He is in Harare. Great to have you on the show with us, Farai. Now, of course, as we mentioned on Friday, Vice President Inonge Wina told lawmakers in the country that it will not default. But it certainly seems like that's not likely at this stage. What's the latest?
Well, Uche, indeed, default looks inevitable. And even analysts I've spoken to say that if we're not yet sure if Zambia has been able to make that payment that will stave off this default at this point in time. But even if it were able to make this payment on the interest it owes to those Eurobond holders, it would simply be kicking the can down the road, that at some point very soon it will be in default of servicing its total external debt stock. So even if it made some payment today and beat this deadline, at some point very soon it will run into similar problems purely because of the size of the debt and the magnitude of the challenges that it finds itself in from a debt crisis point of view. But at this stage, I must say that we are not sure if it was able to make a payment today to beat the deadline that was due at close of business today, Friday the 13th.
Well, interestingly, Zambia has been one of the African nations shouting loud for debt relief. It had said that it wants some debt servicing relief from China Development Bank. Has the country been able to negotiate any other deals with China or the IMF and some of its other creditors?
Well, at this stage, what we do know is that a lot of these creditors are waiting to see how these negotiations with the Eurobond holders will go. Many of them will be reluctant to, extend any further extension because of the challenges that Zambia faces. But it may also be inevitable that they will agree to some sort of renegotiation, restructuring of the debt. The challenge that most of these creditors have is the lack of transparency around the debt stock that Zambia has, but also the government's fiscal discipline in terms of being able to manage its expenditure so that it doesn't continue borrowing, and also its capacity to be able to repay these loans. I think many people observe that if it is forced to make these payments that are due right away, it will be digging the country into a much deeper hole, that the economy will take a knock. It will affect the currency, the strength of the currency. It will affect inflation and lead to much bigger economic challenges. And so based on that, it may be that the country may see some sort of relief from other creditors who may see that it's completely unsustainable for the country to pay it at this point in time, and so a restructuring may be the best option in terms of getting their money in the long term.
And given that a default is more than likely at this stage, what does the road ahead look like for Zambia? Can it stall its creditors? Are its creditors going to be forced to reprofile its external debt? What exactly are Zambia's options right now?
Well, very difficult options for the country. What this will mean if it, does go into default today, it means that it will be cut off from any further borrowing. It will be very difficult to borrow going forward from anyone because of the precedent, the track record that it would have set. It will also create challenges for the country because it will require some sort of funding going forward. The options would be to try and look for financial support from the IMF, for instance. But it's also been in a standoff with the IMF where it hasn't been willing to commit to some of the reforms and to meet with the IMF to agree on some of the reforms that are required to address its fiscal challenges. So the IMF coming on board might be a bit of a challenge because of the lack of cooperation that has been there in the past. But I think what we are likely to see is a reprofiling, as you say, a renegotiation of these debts, moving them forward, because it is unsustainable at this point in time. It will cripple this country if it is forced to do that. And as you say, default is likely. And what we're likely to see is that, yes, there will be a reprofiling, restructuring, and perhaps some sort of emergency relief coming through from the IMF to try and assist this country to navigate these challenges that it is facing, obviously worsened because of the COVID-19 pandemic.
Well, we're certainly watching that situation closely. Many thanks for that update, Farai. Of course, that's Farai Mwakutuya joining us there in Harare, Zimbabwe. Well, let's now turn our attention to our corporate headlines today. Now, airport services provider National Aviation Services has been awarded a new ground handling license by the Civil Aviation Authority of the Democratic Republic of Congo. Under the terms of service, NAS will now offer comprehensive ground and cargo handling services at Kinshasa, Lubumbashi, and Goma international airports. Meanwhile, Kenyan bank KCB has been accredited by the United Nations Green Climate Fund as the first financial intermediary for the implementation of green financing in East Africa. The accreditation paves the way for the bank to receive funds from the Green Climate Fund for on-lending to beneficiary institutions involved in the development of climate-resilient investment projects in Kenya and the wider region. And the first hearing for Nissan's lawsuit against ousted chairman Carlos Ghosn began in Japan on Friday. The company is demanding $95 million in damages. Nissan's alliance with France's Renault has been thrown into disarray since Ghosn's arrest in November 2018 on charges of financial misconduct. The former chairman was awaiting trial when he dramatically escaped to Lebanon last December. In a statement, Ghosn said the trial will prove his innocence. And that is a look at our corporate headlines. Well, we are going to take a short break now, still coming up on the show. Copper theft in South Africa is almost grinding train services to a halt. And Tanzania's Serengeti National Park is named the continent's leading park this year.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Welcome back. Now, for years, the commuter railway system in South Africa suffered setbacks owing to the theft of copper cables. The COVID-19 lockdown from late March made it worse as a rise in theft at train stations was experienced. Now, just 7 of 34 commuter lines out of Soweto to the economic capital of Johannesburg are operational. Commuters have been left stranded and businesses starved of their customers. Here's CGTN's Tuli Shabalala with that report.
Millions of South Africans rely on the commuter rail system. But the recent surge in theft of copper railway and overhead cables has rendered it barely operational. Thousands of commuters have been left stranded and informal businesses have been starved of customers.
It has been leading up to this, if we actually become more realistic about it, because we were hardly buying tickets as a community, There's a lot of dimbobo,
There is a lot of illegal boarding.
Many businesses have faced closures owing to the lack of customers. For one particular business, the lack of security and the closure of train services shut it down after 30 years of operation.
Thieves come here daily to take the cable. They sometimes come carrying guns. They're still digging it up till today. Security tries to chase them away, but they have guns, so we don't understand whether they're employees here or they are thieves.
In July, passenger journeys by rail were only 274,000, down from 5.5 million trips in March. But this is part of a decade-long trend. Annual train trips fell threefold from about 634 million in 2010 to 208 million at the end of 2019. With the cost of cable theft estimated at $320 million annually, the economy continues to deteriorate owing to the rise in losses incurred by the sector.
We have never seen the state of our rail in this dire straits that it finds itself in. I mean, stations are dilapidated. There's nothing left of it. Some of them are burnt down. The buildings don't exist. and it's a shocking state where we find our rail in.
The destruction of Africa's longest railway system is restricting infrastructure development. This is part of President Cyril Ramaphosa's Marshall Plan to revive growth and draw foreign direct investment, which has slumped over the last decade. Thuli Shabalala, CGTN.
And still in South Africa, the tourism and hospitality sectors sighed with relief after President Cyril Ramaphosa announced that all tourists are welcome to visit. That, of course, is provided they have a negative COVID-19 test certificate. The announcement is a boost for the battered sector, which prior to the pandemic contributed nearly 9% of South Africa's GDP and employed over 4% of its workforce. Here's Angelo Coppola picking up that story.
Analysts say that airline operators are especially excited as this may lead to more passengers filling planes, especially for a new entrant into the domestic air travel sector.
We need tourists in this country. Granted, there are still risks, and we need to be mindful of that. But it's brilliant. We're a tourist-driven economy in large part. We've got one of the most beautiful tourist products in the world. We've got a weak currency, so absolutely great news.
The new airline opened its ticket booking office a few days ago, and according to the company, interest in bookings are meeting expectations. This, as the state-owned SAA remains grounded as it awaits another bailout.
We've been fortunate to be able to build a model from the demand side and build a model that says we actually have no idea how demand is going to play out. So if we can be flexible in terms of how we source supply and how we get flights into the air, then we can match our supply with demand out there and build a much more sustainable business.
Their business model is interesting, according to analysts, because it's turned the relationship between the airline and the passenger upside down. They don't own any aircraft. They have a relationship with Global Aviation, who operates the Lift A320 fleet. They only pay the operator when a plane is used.
They are incredible aircraft. They certainly do a great job on the high density routes, like Joburg, Cape Town. And we're going to stick to that. And we most certainly have the ability to upscale and downscale. And as you'll know, there's hundreds, if not thousands, of aircraft sitting around the world not doing anything. So it is really the perfect time to build an airline.
The COVID-19 pandemic has created a unique opportunity to start a new airline. With South African skies opening up again after that announcement by the President, it's good news and good timing for this new airline to enter the market. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Now, the 27th World Travel Awards panel has named the Serengeti in Tanzania as Africa's leading national park for 2020. It is the second year in a row now that the Serengeti has claimed that title. Meanwhile, Fanda Island, also located in Tanzania, won Africa's leading luxury island category. Here's CGTN's Daniel Kijo with the details.
The World Travel Awards has declared Serengeti as Africa's best national park. It was named Africa's top destination for 2020. The Serengeti defeated the continent's other world-renowned sites, including Central Kalahari in Botswana, Etosha in Namibia, Kruger National Park in South Africa, and the Masai Mara National Reserve found in Kenya. The Tanzania National Parks officials say the success was a result of joint efforts.
All the efforts done by the authority and government to ensure the park was protected in the highest standards of conservation has led to the Serengeti winning this award.
The Serengeti is famously known for the unique animal migration of about 1.5 million wildebeest.
We believe that through the award, more people will come, not only for tourism, for leisure, but also researchers will want to come to Tanzania and see for themselves why Serengeti, why is the migration taking place, why are the animals living in Tanzania for 11 months and only 1 month they cross over to go to Kenya. The Serengeti is one of the parks that everybody should go and see because of the diverse animals that live in the park, but also the fauna which is found only in the Serengeti.
The World Travel Awards are a global initiative to recognize and reward excellence in the travel and tourism sector. Votes were casted by travel industry professionals and the public, with the nominee gaining the most votes in a category named as the winner. But tourism experts say more work needs to be done to maintain the high bar set by the victory.
The government has to put in more money to see that they put more money into conservation and protection against poaching, but also to see that the Tanzanians become more aware of what we have and that they treasure their natural resources.
Tanzania was one of the first countries to reopen its skies and invite tourists into the country. Tourism contributes about 17.5% of the country's GDP. According to the government, this saved over 400,000 jobs. Tanzania also received the World Travel and Tourism Council Safe Travel Stamp in August. The council gives countries the stamp to indicate verified safety standards against COVID-19 are in place there. This enables travelers to make safe travel choices during the global pandemic. The Tanzanian government has been reforming its tourism sector over the last 3 years. Despite 2020 being a difficult year for the global tourism sector, it seems to be ending well, with the Serengeti National Park winning this award, taking a gamble with reopening its skies before its East African counterparts and getting the Safe Travel stamp. Tanzania is looking to become the king of the jungle in a continent full of tourism giants. Daniel Kijo, CGTN, Dar es Salaam.
You're watching Global Business Africa. We're going to take a short break now, but still coming up. Central bankers insist that the global economy still requires massive assistance despite progress towards a COVID-19 vaccine. And Hong Kong unveils social distancing parks to revive outdoor entertainment.
Taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 14 hours of rain.
I try to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
I just hope everyone can remember that the situation is not permanent and that everything will get better eventually.
Now, in other stories making headlines today, Ethiopia has appointed a new leader for the northern Tigray region, university academic Mulinega, in a bid to tighten its grip there. There has been fighting between federal and local armed forces for more than a week now that has displaced more than 14,000 people. Now, Ethiopia's Prime Minister Abiy Ahmed, the 2018 Nobel Peace Prize winner, vowed to deliver a decisive win in a short period of time. And more than $2 billion has been secured to distribute COVID-19 shots to poorer nations. The announcement was made by an alliance between the World Health Organization and Gavi, the Vaccine Alliance. It says the money was raised by sovereign and private donors from across the world to ensure everyone has access to coronavirus vaccines. And the Democratic Republic of Congo's health minister says the 11th Ebola outbreak in the northwest of the nation will be declared over on November 18th if no new case is reported. Dr. Eteni Longondo made the remarks in the capital, Kinshasa. And finally, aid agencies are warning that measles is now widespread and getting out of control in the eastern part of South Sudan. South Sudan's health ministry says it is working with partners to conduct measles vaccinations in the areas where the outbreaks have been reported. And that's a recap of some of today's top headlines. Now, in some international news, the global economy requires massive assistance despite progress towards a COVID-19 vaccine. That is according to 3 of the world's top central bankers. They were speaking at an online conference held by the European Central Bank. There is, of course, growing pressure on world governments and central banks to do more to shore up the economy, as, of course, the COVID-19 virus continues to spread.
It's just too soon to assess with any confidence the implications of the news for the path of the economy, especially in the near term. And I would say with the virus now spreading, the next few months could be challenging.
On the vaccine, though, let me in a sense, support and reinforce what Jay said. It's good news, obviously. It's encouraging, and we need encouraging signs. But it's true, as Jay was saying, that it's of course not here yet in terms of the implementation of it.
I don't want to, be exuberant about this vaccination. Because there are still uncertainty about the logistic, about the transportation, about the rolling out, about the fabrication, about the number of people that will be vaccinated.
Meanwhile, French President Emmanuel Macron is calling for a potential COVID-19 vaccine to be a global public good. He also urged for a consolidated primary health system against the pandemic. President Macron was speaking during the official ceremony of the Paris Peace Forum, of which the 3rd edition is being held virtually. His Senegalese counterpart, President Macky Sall, adds that countries should accept differences but move together in the face of challenges.
On ne gagnera pas contre le virus.
We will not win against the virus by leaving behind a part of humanity. Otherwise, this will again reinforce our inequalities and it will hinder development for all. And so how do we guarantee that the COVID-19 vaccine is globally of public good? How do we guarantee good production? And how do we ensure that we continue our common battle for basic health systems, since we cannot distribute vaccines or treatments, and since we are concerned with these two fields without a consolidated primary health system?
Sans système de soins primaires.
Je suis africain, vous êtes européen, on n'est pas les mêmes.
I'm African, you're European. We're not the same, but we can share certain values. We are different, but we can be together. For me, that's it. We have to accept the differences, but we have to go together towards what we want to build in common.
Vers ce que nous voulons bâtir en commun.
And the UK says it is ready to roll out a coronavirus vaccine as early as the start of December. But with the virus not yet under control and most of the country still in lockdown, officials are warning people should continue following strict rules, even as its economy takes another hit. Now read Jabrakil now reports.
Like much of the world, a possible COVID vaccine is causing plenty of excitement in the UK. The government here has invested heavily in finding a coronavirus jab and has already snapped up 40 million doses of the one being developed by Pfizer and BioNTech. Health Minister Matt Hancock says the country could start rolling it out from the start of December, but he urged people not to think of it as a silver bullet.
We must not slacken our resolve, and there are no guarantees. And so it's critical that people continue to abide by the rules and that we all work together to get the R number below 1.
The reality on the ground is England is back in a nationwide lockdown. not as severe as the first, but still highly damaging for the UK's economy. Latest figures show the extent of that damage as British businesses cut a record number of jobs in the third quarter of this year.
According to official data, in the 3 months to September, more than 310,000 people were laid off. A lot of that was down to the economic damage caused by COVID. The unemployment rate has also risen to almost 5%, meaning 1.6 million people are now out of work in Britain, and the situation could get even worse in the coming months.
The Bank of England predicts the unemployment rate will peak at nearly 8% by next June. The government says it's supporting jobs after it recently extended its furlough scheme to cover up to 80% of workers' wages until March. But that was after it ended the previous programme last month. Many employers say the change, which followed a series of U-turns over policy, proved too little, too late. Louis Jabakil, CGTN, London.
Meanwhile, fishermen in the southwestern English town of Brixham are supporting Brexit in the hopes of reviving their industry. They believe more British control of their waters could help expand a sector dating back over 700 years. John Bevier has their story.
They say that there are two industries in Brixham: tourism and fishing. The former has been devastated by the coronavirus pandemic. The latter is still going strong. 63% of people in this area voted leave in the Brexit referendum. They're hoping that British control of its waters will be good for an industry that's halved in size since the UK joined Europe in 1973. Since then, there's been huge frustration at having to abide by European law.
It's so galling for a British boat to be fishing, and 500 yards away there's a foreign boat scooping up whatever they want. And then we have the factory ships that come in and they just catch everything, you know. So you can see the anger, you can see the frustration. They're just trying to do their job, but they've got so many restrictions.
The fishing industry only makes up about 0.1% of the UK economy, but it's of huge symbolic importance and is one of the stumbling blocks of the current Brexit negotiations. Other EU member states don't want to lose access to well-stocked British waters. But it's not just about who can catch how much fish and where.
Brixham is the most valuable fish market in England. In a good week, they'll sell more than £1 million worth of fish and shellfish. That's around $1.3 million. Some stays in the UK, but around 70% of it is exported. And there are now more questions than answers about the future of that business.
There are concerns about tariffs that could be imposed on what's sold here, especially in the event of a no-deal Brexit. The extra burden of more paperwork and regulations is also likely to have an impact. But it's in everybody's interest to find a solution.
Profitability in the merchant sector of seafood is bound to decline initially, but we should pick up new markets as well. And of course the channel is a two-way street, so any restrictions that are attempted for our exports will be reflected also in the other direction.
They've been landing fish here for more than 700 years. With a proud history, they're now hoping for a bright, if somewhat uncertain, future. John Beaver, CGTN, Brixham.
Well, let's move on now. Hong Kong's first socially distant outdoor entertainment park is opening its doors to the public. Located at the harbourfront of the Central District, it's one way the entertainment industry has pivoted to cope with COVID-19.
It's the place to come to socialize in safety. This outdoor area is dotted with 100 enclosed areas. Each has seating for between 2 and 4 people in areas measuring 2.5 square meters. There's a gap of 1.5 meters between each enclosure, so groups are kept at a safe distance from each other. This park has been built as a response to the coronavirus pandemic. Visitors are keen to get out of their homes and socialize, but they want to minimize the risk of catching the virus.
It's been a long, hard year locked inside for the majority of it, so
It's nice to be able to sit outside with some friends, have a drink, enjoy a film. I'm really looking forward to it.
It's been a challenging time across the world for the entertainment industry. With large gatherings ruled a clean danger zone, bringing people together for cinema, theater, and gigs is a tough sell. Simon Wilson, managing director of The Grounds, which is organizing this outdoor event, says they've had to be innovative to make such activities possible.
So things are extremely challenging at the moment in the events and entertainment industry. So we had to really rethink and be creative about a solution we can find to address the challenges of COVID-19. We have to reinvent, reiterate and rejuvenate the events industry with clever concepts that can deliver safe entertainment for consumers to enjoy. We're delighted to present that here at the grounds at AA Vitality Park to allow guests to enjoy something really special and unique, but also safe and responsible at the same time.
Apart from movies, the location also offers other entertainment activities, including live music performances and yoga classes. The outdoor park health measures include online pre-registration, health declarations, temperature checks, mandatory face masks, hand sanitizers at each entry and exit point, and regular cleaning.
The whole consumer market has shrunk due to the pandemic, but it doesn't mean all consumer products are affected. For example, luxury spending has shrunk, but entertainment, and especially food and beverage, have not been. That is why a lot of companies are trying to be creative. Ideas like staycation or this socially distanced outdoor cinema can draw the so-called revenge shopping. This is a good long-term strategy for businesses to build up reputations and company brand names.
The cinema had a trial screening last Friday. All tickets for the first night's movie sold out in advance. Shen Li, CGTN.
And shifting focus now, here's a look at commodity markets today. Oil prices fell. Brent crude was down over 1%, pressured by fears about a slow recovery in fuel demand due to an accelerating rise in COVID-19 infections. Prices still remained on track for a second straight weekly gain. They were helped by hopes of a vaccine. Meanwhile, gold prices inching higher today as its safe haven appeal grows. Of course, that's as fears over mounting cases overshadowed hopes of a vaccine. But the metal is still on track for its worst weekly performance since late September. Let's take a short break now. Still to come on the show. COVID-19 breeds a new way to dine in South Africa. We take a tour of the Kloof Street Village in Cape Town.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN. See the difference.
Now, a new dining experience has been launched in Cape Town, South Africa, specifically designed to accommodate the current COVID-19 pandemic needs. Kloof Street Village is a new casual fast dining hub, which is designed to mitigate the spread of COVID-19, which of course has already had a significantly negative impact on the country's hospitality sector. Well, CGTN's Travis Andrews has more on that report.
Since the pandemic hit, many restaurants across the hospitality sector have had to retrofit their establishments to become compliant with new COVID-19 safety regulations. However, Kloof Street Village is somewhat different because it has been specifically designed from the ground up with COVID-19 and public safety completely in mind. The dining concept is being piloted by Real Foods, who are betting big on the growth of the business within the low-touch economy due to shifting dining and COVID-19 hygiene habits brought about by the pandemic.
We used the opportunity during lockdown to say, just think about doing things differently. And for us, COVID has really changed the way that people experience dining. And we redesigned the space completely during lockdown, taking into consideration people's health and safety.
Besides the regular health and safety measures such as hand sanitation and mask wearing, Kloof Street Village has a raft of other measures to mitigate the spread of the disease. That includes a completely open plan design to create better spacing, significantly upgraded ventilation systems to help circulate the air, and even touchless foot pedals to open toilet doors.
So we're piloting quite a lot in the store actually. You'll see that there's absolute contactless ordering system here. You'll see that we've got 2 kiosks behind you where customers don't even need to interact with any of our staff members. You can come in, place your order at the kiosk for a takeaway or sit down. Takeaway orders immediately then goes to a pickup area as you come in the door.
Although socially distanced tables are part of the safety measures, it doesn't create a socially distanced atmosphere, which affects so many restaurants. Instead, this is the new normal of casual dining in post-COVID-19 settings.
And this establishment even has its very own entrance for delivery drivers, so that the number of people within the restaurant can be brought down to a bare minimum.
Cape Townians keen on avoiding inside spaces can also order from the outside through large full stack windows that make ordering easier and safe.
People are very excited about the concept, you know, in where you can order without physically having to go to the station with the kiosks and things like that for the Mobi apps. And I think the whole design as well, people have taken very well to it because it's open plan.
For now, the concept is already proving a big hit with Cape Townians and could be rolled out even further as more and more people embrace dining in safe and mostly contactless environments. Ravs Andrews, CGTN, Cape Town.
Now, Nigeria has a serious housing deficit. At the core of the problem is the lack of affordable housing. But one horticulturist and entrepreneur in the country's northwest Kaduna state is now championing a campaign for affordable and environmentally friendly housing. CGTN's Deji Badmus has this story.
Could this be part of the answer to a serious housing deficit in the north of Nigeria? This man is emphatic it is, and is making his case with this bamboo house, which is deliberately constructed on the side of a busy highway in the northwest Kaduna state to ensure he draws attention to his creation.
A
bamboo house can last for 100 years without collapsing. It's also environmentally friendly. It's cheap and very fast to construct. A 2-story bamboo house like this one can actually be fully completed in just 20 days. Moreover, the materials needed for the building are easily available locally and in abundance.
The bamboo house is particularly Salisu's answer to the serious housing deficit in his home state of Kaduna, especially in rural areas of the state where the housing challenge bites even harder. This 2-story prototype measures 30 by 30 feet, and when fully completed, it would contain 6 rooms, 3 toilets, 2 kitchens and a store.
The country's housing deficit could be addressed if we were encouraged to improve on our work and build more bamboo houses for the people. I started this because I know many people cannot afford block houses due to the huge cost, so I decided to help.
In a region of the country where temperatures could reach very high levels, Salisu says his bamboo house is also a solution to the often searing heat in Nigeria's north. With interest in his creation growing, Salisu, who also doubles as a horticulturist, is training young people in the art so they could fan out across the state in anticipation of an expected boom.
Our aim is to help the youth and teach them different skills. Building bamboo houses requires a lot of skills like carpentry and iron bending. The pots that beautify the houses are from different cultures, especially in the north. We are trying to build a tourist point here.
Bamboo constructions are not particularly new in Nigeria, but they are rare in the country's north, something Salisu is now pioneering in the region to address a local problem. But the challenge for him is that bamboo trees are hardly grown in the north, so he has to travel to the south of the country to get his supplies, which is adding to the cost of the building. He's hoping that his initiative will spur bamboo tree plantations in the north in the near future. Deji Badmus, CGTN, Kaduna, Nigeria.
And Santa Claus has officially opened the Christmas season as he asks the world for happy thoughts during these difficult times. But as with most things in 2020, it happened virtually over the internet. Well, Santa's hometown in Finnish Lapland usually welcomes hundreds of thousands of visitors every year, but the pandemic has forced tourists to stay at home this year.
Santa!
My dear friends, cheerful greetings to you from my hometown of Rovaniemi on the Arctic Circle.
Christmas has officially been opened in Finnish Lapland, but it looks a little different this year. It was done via a live stream over the internet.
This year has been rather exceptional, and it seems we may have to live with the pandemic for quite some time. However, this time we can rejoice in the facts that Christmas really couldn't come at a better time. We all need plenty of joy and happiness in our lives right now.
Santa Claus Village is based 8 kilometers north of Rovaniemi, the capital of Finnish Lapland. Tourism is an important part of the town's economy, with more than 500,000 people visiting the area each year. But this year, global travel restrictions mean very few can make the journey to the remote region.
If we look at the tourism revenue loss in Rovaniemi itself, it's going to create something like 200 million euros loss, which is awfully lot of money. And of course, the question is that can it be somehow kind of replaced by the Finns traveling over Christmas season and winter holidays? And we have our doubts, of course, because Finland is such a tiny country.
Christmas is peak season, with families flocking here from around the world to meet Santa. For children, perhaps their biggest concern is whether he will be able to deliver their presents as usual. But the man himself has some reassuring words.
This Christmas, we are going to need so much our magic of Christmas. When people are having happy thoughts, that makes us that magic of Christmas. And also when you're following your social distancing rules and public health recommendations and everything like that, that makes us that magic of Christmas.
Yes. Oh, that's quite heavy. Can you help me? Oh, okay.
Launching its Christmas season, the town of Rovaniemi said it was important to always have a little Christmas spirit, no matter what's going on in the world.
Oh, hello. I have something for you here. This is for you.
CGTN.
And before we leave you, a quick look at Africa's currencies today. South Africa's rand a touch weaker as traders eye the country's third quarter unemployment data. Now, the currency has slowed in its advance, but remains on course to recover previously lost ground over the coming months. That's as the global economy recovers while the dollar declines. In Nigeria, FX turnover dropped by 7.4% this week at the NAFEX window. The naira appreciated against the dollar to close at 385 naira per dollar. It depreciated further against the dollar on the parallel market, closing at 468 naira per dollar. That's as demand pressure in the foreign exchange market intensifies in Nigeria. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.